Gold price has hit a new all-time high, going above $2,800 for the first time ever. How much higher can it go? According to the LBMA 2025 survey, gold price could hit $32.90 and silver could go as high as $43.50 this year. We're going to take a look at some of the forecasts that these analysts have predicted in previous years and see how they match up to what gold and silver actually did. I also want to take a look at what the Fed is doing, because last week they decided not to lower rates. How could this affect precious metal prices? And lastly, I want to talk about the Bank of England. They're currently experiencing a gold shortage. This could be one of the biggest stories we've seen in a long time. Thank you so much for watching. I do sincerely appreciate it. Here we are looking at gold price sitting at $2,808 an ounce. Gold finally did it. It has gone over 2,800. The last time it was close was October of 2024, but it could not quite get there. Let's take a look at silver. Silver sitting at $31.50. This is the highest silver has been all year, with the exception of Thursday. It was a little bit higher, $31.63. But now the question is, can gold really go above $3,000 an ounce? And will silver go above $40 an ounce this year? Well, let's take a look at the LBMA 2025 survey. All right, so if you've never read the London Bullion Market Association survey, basically they poll a bunch of so-called experts and ask them, where's gold going to go? Where's silver going to go this year? Now, I read through this, and actually only 6 of the 26 don't think gold is going to go up to 3,000. So over 75% of these experts are predicting gold will hit $3,000 this year. And then when we take a look at silver, there were actually only 25 people polled, but 9 of them think silver will go to $40 this year, so about 36%. So the majority actually don't think silver will hit $40 an ounce. Now the question becomes, how often are they right? Well, out of the last 15 years, for gold, their forecast average was lower than the actual average price 9 out of 15 years. So most years, gold actually did better than their prediction. But when it came to silver, only 5 of the 15 years were their forecasts lower than the actual average price. So most years, silver did not do as good as they were predicting. But if we look at just last year for silver, they forecast $24.80 an ounce. The actual average was $28.26, so they were way too low last year for silver. And for gold, their forecast was $2,059. The actual average $23.86. So again, way too low on their guess. What's going to happen this year? You tell me. Last week, Jerome Powell and the Fed decided not to lower interest rates. Listen to this.
Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course.
Now moving forward, if we look at CME Group's FedWatch tool, you can see their prediction for the upcoming meeting in March is that rates are not going to go down, only a 23% chance that they will. But if we fast forward to December of 2025, they're predicting rates are surely going to go down 1 or even 2 times by then. So it's looking like the Fed is probably just pausing the rate cuts for now, which is not good for precious metals. But once they resume cutting rates, this is very bullish for both gold and silver. Now, before we talk about possibly one of the biggest gold stories in a very long time, a shortage in London, I first want to talk about the mid-roll sponsor for this video, Nevada Canyon Gold. We just wrapped up Donald Trump's first week back in office, and I have to say it's abundantly clear that America is back. And many of you know Donald Trump is pro-mining, pro-minerals, and we're seeing a lot of gold stocks start to erupt. But even so, I'm going to show you a few charts today that are going to suggest that gold stocks are actually historically cheap. Now, today's sponsor, Nevada Canyon Gold, is doing business in the world's premier jurisdiction, Nevada, and they're executing the most cost-effective model, royalties and streaming, and deploying these into a first-to-market strategy. Now, the main reason I'm profiling them today is because their stock actually fell by 85% just over the last few years and has recently bottomed and is now starting a clear uptrend. But when we take a look at mining stocks in general, I just want to show you how they appreciate in previous bull markets. The smallest one here, 273%. Then we have 554%, 596, and the big one, 1,330%. That was a big bull run there. Well, what's going on right now with the junior gold miners? Well, gold stocks are down 73% since 2011, while spot gold is up nearly 40%. This is what I call a screaming opportunity in gold stocks. How can the metal be up 40% since the 2011 highs and the miners down 73%? What a massive opportunity, in my view. History says the next move for precious metals could be blinding. Gold has broken out after a 4-year consolidation, and the new administration is bringing back industry to American soil. Today, a number of the most promising gold projects in Nevada, for instance, are owned by companies whose share prices are down over 80%, sometimes even 95%. But why do we care about Nevada? I mean, it's just one state out of 50, right? Well, it's actually the gold capital of the United States, accounting for 76% of the nation's production. And then when we look at Nevada Canyon specifically, well, they have a lot of things going for them. Their innovative approach avoids the high capital costs of mining operations by focusing on royalty and streaming agreements. The company secures rights to production while maintaining low overhead. Also, the company's CEO has driven the roads of Nevada's gold mining regions for the past 30 years and worked with the biggest mining companies. His database of projects in Nevada is as good as it gets. I also want to point out that Robert List, the former governor of Nevada from 1979 to 1983, has joined the board of directors at Nevada Canyon Gold. List has been appointed on boards and commissions in the administrations of Presidents Nixon, Ford, Reagan, and George H.W. Bush, including the National Public Lands Advisory Council. Do your homework, do your own due diligence on this new royalty, streaming, and exploration accelerator company, Nevada Canyon Gold. Think about this. Nevada Canyon Gold is down 80% from its peak market cap and has recently bottomed out and begun its uptrend. It is a pure play on Nevada's gold, just as President Trump comes in with a pro-business, pro-mining approach. But most importantly, gold stocks are cheap historically right now. So if you're looking for different mining companies to invest in and you're looking at Nevada, I think you're looking in a good place. I mean, if Nevada were a country, it would rank as the 5th largest gold producer globally, surpassing nations like Canada and Peru. And Nevada Canyon's flagship assets are strategically located within and near some of Nevada's most prolific mining districts and gold mines. So if you want to do your own due diligence on Nevada Canyon Gold yourself, I will put a link for them down below in the description. And with that being said, I do want to thank Nevada Canyon Gold for partnering with me to help make this video possible. All right, now what is the deal with this gold shortage in London? Is it actually a shortage? Here we are reading the Financial Times. Let's dig in. They say a surge in gold shipments in the U.S. has led to a shortage of bullion in London as traders amass an $82 billion stockpile in New York over fears of Trump administration tariffs. The wait to withdraw bullion stored in the Bank of England's vaults has risen from a few days to between 4 and 8 weeks, according to people familiar with the process, as the central bank struggles to keep up with demand. Hold the phone. A 4 to 8 week delay for people trying to withdraw bullion from the Bank of England's vaults. They're saying that a lot of their gold has gone to New York because of fears of tariffs. But is it just that they're having trouble moving this gold around, or do they actually not have enough gold to cover all of the deposits? People can't get their hands on gold because so much has been shipped to New York and the rest is stuck in the queue, said one industry executive. Liquidity in the London market has been diminished. Wow, that's really interesting. I mean, maybe Trump won't even put these tariffs in place, but just the threat of the tariffs could completely unravel what's going on over in London. According to the U.S. debt clock, the paper to gold ratio now is 127.55 to 1. So that is how many paper trades of gold are going on for every 1 ounce of gold out there. So when all of these people come asking for their gold, now the Bank of England is saying, oh, we're actually delayed 2 months. Sorry, you're going to have to wait. This seems fishy to me. Now, they do say that total gold flows into the U.S. could be far higher than the COMEX numbers reflect, according to market participants, because there are likely to have been additional shipments to private vaults in New York owned by HSBC and JP Morgan. The two banks declined to comment. So maybe more gold has moved over to New York than has been reported, but still, it's interesting to me that just these threats of tariffs have moved so much gold into the U.S., and it's kind of showing this weakness in the gold markets, right? There's a lot of paper trading that goes on. There's not that much physical gold out there. So I don't know. I mean, I'm going to keep an eye on the Bank of England, see if they increase the wait time for gold, but 2 months seems like a long time to have to wait. So I don't know. Let me know what you think about all of this down below in the comments section. Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.